Top picks now from David Burrows, president of Barometer Capital Management. He's been hinting and teasing at U.S. banks. Here is the real deal. JP Chase, a top pick. He bought this just a couple of days ago, most recently, just under 50. And I'm just looking back to 07. It's only a couple of dollars away from its, which I'm assuming it was an all-time high in 07.
Right,
yeah.
right. So our basic theme that we have across all our portfolios right now is that in low interest rate environments, if you went back over 100 years when you had low rates for a long time, CEOs recognize at some point investors need cash flow replacement and they start to pay out more of their capital to shareholders. So we're looking for areas of the market that can do that. And certainly the financials have gone through a period of rebuilding their balance sheet. And we think there's a catalyst over the next couple of years to see increased dividend payouts. So JP Morgan is paying out about 23% of its earnings. Historically, it paid out about 35%. So they would do a combination of share buybacks and dividend increases. Over the next week, we're going to find out who's able to raise dividends, and not that we think it's going to be immediate, but we do think there's going to be a steady progression of not only paying what they have been paying and growing it as earnings grow, but growing the percentage of earnings they're paying out. So there could be a pretty steady increase in the dividends being paid. And JP Morgan dodged the bullet. They've been able to take market share. So if I look at it, it's good execution. They're increasing market share in a sector that people care about, and they've got a very solid return of capital policy with the public. So I think that they're going to see increased number of shareholders.
One of your themes off the top of the show was the U.S. housing market. Here's one way to play it. Home Depot, you bought this, I guess, yesterday, most recently, $71.28. It's been raising its dividend. You expect that to continue, I guess?
Yeah, this is a large holding for us. We have a significant focus in companies that benefit from a housing revival. Again, Home Depot was the strong one going through the crisis. They started in 2007 in a restructure to streamline their operations. They slowed growth and managed their cash. Since 2002, they have bought back 1 billion shares.
Wow.
Okay, so they are very clear about returning capital. They've had an 11% growth rate in their dividend over the last 3 years. They've just announced they're going to buy another $16 billion worth of stock back, which is about 16% of the float. So again, good execution, increasing market share, strong sector, strong return of capital to shareholders.
And record highs recently, not today, but recently. And another well-known U.S. company, J&J, Johnson & Johnson. You bought this back in February, most recently, just under 77.
Now, a lot of people don't realize this, but the pharmaceuticals have been about the best performing part of the market year to date. And this started about 18 months ago when this group really sort of lit on fire. It's, again, a very large industry. It was under-owned after 12 or 13 years of weak performance for the group. This company has a diversified asset base of consumer products, pharmaceuticals, and devices. They've got 50 years of dividend increases. The balance sheet is rated AAA, stronger than a U.S. Treasury bond. Costs less to insure against default than a T-bond. Yet, you know, they've grown their dividend steadily, about 8% a year over the last 5 years. So very predictable, strong return of capital policies, good execution. It fits the theme, I think, in this market.
All right, great stuff. Johnson & Johnson, Home Depot, JP Chase. You can't get many more well-known companies than that in the United States. Those are top picks from David Burrows. Great to see you as always.
Thanks very much for having me.
Appreciate your insight and laying out your game plan there for us. We will say goodnight for now. We have Gordon Reid tomorrow night on U.S. equities. Tune in for that. As always, if you're doing any investing, you want to consult with a qualified financial advisor, you can follow me on Twitter. Wasn't on there much today, didn't have much of a chance, but at Mark Bunting BNN if you want. And we'll say goodbye for now and see you tomorrow night. Bye-bye.